Today is Thursday, May 30th. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Kevin Mirko and Jason Fernandez are on the show with us today. But first, let's take a look at some of the market indicators as the total market capitalization printed a fresh high for the year at more than $280 billion. The cryptocurrency index, CCI 30, has had another bullish day as it rose above the 4,700 point mark. The index is up by 60% month to date and nearly 120% in the green so far this year. The 30-day Bitcoin volatility index remains close to the 4.5% mark, the highest level since January of this year. The CoinMarketCap website's 24-hour traded volume indicator has been trending up and towards the $90 billion mark. The Messari website's real 10 volume measures at slightly more than $3.4 billion. The Bitcoin dominance indicator has slipped further towards the 55% zone after peaking at more than 60% in mid-May. The top 5 digital assets are all trading in the green. Bitcoin has been mostly trading sideways this week in the $8,700 range. Ether rose sharply to break through the $280 resistance level. The past week has been bullish for XRP, and the asset trades at just under the 46-cent mark as it is approaching the $0.50 territory. Bitcoin Cash crossed the $470 line for the first time since the November hard fork before giving up some of the gains. EOS has stabilized after breaking through the $8 resistance line. The Coin 360 heat map shows a bullish picture as altcoins are driving the markets higher. According to the Token Spread website, Bitcoin trades at a 2.7% discount on the XMO exchange. The same marketplace has the biggest buy and sell side difference of 0.34%. Now, let's take a look at some of the characteristics of Hedge Trade. This platform looks to revolutionize social trading by using the blockchain technology. Experts are incentivized to post accurate predictions to earn proceeds from the users who actually purchase them. If the prediction is correct, money goes back to the customer. The platform's native token has a ticker hedge, and traders can stake these tokens when creating trading predictions. This digital asset reached an all-time high of 35 cents in March of this year, and as of today, it trades at just slightly less than 16 cents. We will now review the performance of various cryptocurrency asset classes as grouped, of course, by the Messari website. The infrastructure group shows the top increase of just over 4%. NEO and IOTA are the main bullish drivers with double-digit gains. The media and entertainment category stands nearly 3% in the green. The Theta token is the top gainer with a rise of close to 14%. The financial sector is up by 3%. Chainlink is the only major asset that stands in the red. And the currency category is the most bullish asset class today with a sharp increase of almost 6%. Bitcoin SV is a major contributor to the gains as it stands 73% in the green. The services section wraps up this overview with a gain of nearly 2.7%. The MaidSafe coin is one of the most bearish assets here, with a decline of approximately 2.5%. This is where the 5 major cryptocurrency categories stand so far this Thursday. And finally, we will provide you with an overview of the most significant moves among the top 100 digital assets. There are some sharp gains among the Bitcoin forks, just a single double-digit decline. Straight after this, we will go to a break, so enjoy and don't go anywhere.
Blockchain is not just a technology, but also an investment opportunity. So would you like the opportunity to pitch your company to high net investors with yearly collective investments in excess of $100 billion? Monaco Blockchain Conference is being held in Monte Carlo, Monaco on May the 31st, 2019. The event brings together 100 leading investors, funds and family offices to discuss the what, the how and the why when it comes to investing in blockchain. The one-day conference will have speakers from leading investment funds and guests like Giuseppe Ambrosio, president of the Monaco Single and Multifamily Association, Oliver Harris, head of crypto asset strategy at JP Morgan Chase, and Sean Broderick, general partner at SOSV. The event will have media coverage from Forbes Monaco post-event. BloxLive TV and Cointelegraph will be live broadcasting, reaching millions of potential clients. Conference passes start from €199 and include the full access to the conference, lunch on the Sun Terrace and champagne investor networking. If you're interested in becoming a partner, you'll have the opportunity to reach over 14 million people per month leading up to the event and gain massive exposure to investors during the event by becoming a partner as well as partner branding at the hotel during the conference. Partners will have 30 minutes to present their company as an investment opportunity with support before the event to ensure the best chance of raising some serious capital. You'll be pitching to over 40 investment funds, 30 family offices and 80 high net worth investors. Their collective investments each year is in excess of $100 billion. Partnerships is €3,000 for 2 tickets. All the day activities included plus access to the investor cocktail party. For 15% off ticket prices, use the discount code below and see you in Monaco.
– 180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is BloxLive TV.
We are back with our crypto experts, Jason Fernandez, COO and co-founder of AE Token, and Kevin Mirko, CEO of the Coin Metro Exchange. Kevin, Jason, great to have you both. How are you doing?
Hi, Leah.
Good, Leila. How are you?
I'm good, thank you. I'm good. Now, Kevin, we'll go straight to you. So altcoins have pushed the total market cap above the $280 billion mark to actually print fresh highs for the year. So the market share of Bitcoin has declined by approximately 5% since mid-May. Do you see this trend continuing?
I think the ebb and flow, as I think Jason and I have both coined this over the past, pun intended, by the way, have coined this over the past couple of weeks, maybe even the past couple of months at this point, I think will continue. I think it's a sign of a maturing market. In most markets, when you start to see stagnation or you start to see pricing on, let's say, some of the larger macro assets that exist in that market, you'll start to see flow from those macro assets into micro caps and mid caps, and vice versa. When those micro and mid caps actually show some profit, you end up seeing profit taking and funds flowing back into those macro caps, which are considered either safe havens or, let's say, in equities they'll call them blue chips. Those are companies or that have been around, for a long time and generally hold a good amount of market capital, of AUM inside the market. So I think this shows that the market itself is maturing. Back in 2017, when we saw prices continue to rise, they rose across the board. They were mainly people coming in to buy and hold. These weren't traders. They weren't day traders. These were generally speculative retail guys, mom and pops that were coming in and either buying to get inside of some type of ICO, or they were simply buying because they saw it on CNBC, or they saw it on BBC, or they saw it somewhere in mainstream media. And now what we're seeing is really, you're starting to see relevance. You're starting to see that day traders are really starting to take a hold of the market. We're starting to actually see some real trade ebb and flow back and forth between these macro and micro cap assets, which like I said, is a positive sign for sure.
So the market is maturing there, and more day traders. Absolutely brilliant. So Jason, we'll go to you. What are your thoughts for us? Is it fairly similar?
Yeah, so I think the market share of Bitcoin is declining, but that's as a percentage of the entire pie. The price of Bitcoin itself has been doing pretty well. So I think it's important to realize that alts are doing well for various reasons specific to those particular cryptocurrencies. So this isn't capital flight for Bitcoin because Bitcoin is slow. And so in other words, it's not like alts gain is Bitcoin's loss. In this case, Bitcoin seems to be holding firm at 8,700, and it's not like the alt season hasn't set in yet because people are not yet convinced that Bitcoin's rise is over. So people still think more could come. So it's just as a percentage of the total crypto market in general is declined, sure, but that's only because a lot of the other altcoins are doing pretty well.
Okay, thank you for your thoughts there. Now, Grayscale, one of the leading digital asset managers, has revealed that nearly 94% of their $21 billion of assets under management are actually allocated in Bitcoin. And Ethereum Classic was their second largest holding with just under $41 million. So what are your thoughts on their portfolio, Kevin?
Well, it just shows, like it shows in any industry, that when you talk about institutional money, institutions go where the liquidity is. So it makes sense that an institutional play kind of has to be wrapped around mostly where liquidity lies. So in this industry, in this market, that's Ethereum, and that's Bitcoin by leaps and bounds. And then number two would be Ethereum. So it makes perfect sense. They're following the liquidity. You don't want to get stuck into a position where you need to liquidate, or you're trying to simply buy mass quantities of an asset, whether that be in the hundreds of millions or billions, and you get to a point where you're unable to buy, or you're actually kind of shooting yourself in the foot as you buy into smaller assets and you're pushing the price higher. So you want to find an asset that will allow you both to get in and out, that there's liquidity that sits in that market, and that when you're buying in, you're not actually raising the price against yourself. And when you're selling, you're not actually, the price isn't falling because of your own influx into the market. So it makes sense. I don't see, most industry professionals or most institutional money, even in other markets, we could talk about equities, we could talk about derivatives, we could talk about bonds. They don't go into the more speculative, higher risk, lower liquidity markets. They may have a percentage of their portfolio, but generally speaking, it's probably going to be 2% or less, mainly because there's more risk where there is less liquidity.
Okay, so overall, that portfolio does, of course, then make sense for you because they're going where the liquidity is, as you say. So, Jason, what are your thoughts?
So, Bitcoin is obviously king. And that's certainly reflected in their portfolio. And 94% is a pretty sizable percentage of their entire portfolio. Ethereum Classic is an interesting choice. It's been experiencing a bullish trend lately over the past several weeks. And main reason is because Coinbase announced that they would be listing Ethereum Classic. Now, normally Coinbase doesn't quite announce beforehand, but because obviously they would rather have the buying happening on their own exchange, but this time they did, and that's proven to be pretty profitable for holders of Ethereum Classic. But also, Ethereum Classic developers just recently released the Astor testnet update, and that's supposed to make the network resistant to the 51% attack, or at least more resistant to a 51% attack. So, but overall, I would say Bitcoin is a far superior store of value and is also marginally more secure than ETC.
Okay, thank you for your thoughts. But you still think Ethereum Classic is an interesting choice, very interesting. Now, Bitcoin SV doubled in value as Craig Wright filed the copyright application in the US. This time, the same coin actually appears to have rallied on fake news circulating social media in China, claiming that Craig has transferred 50,000 BTC from a Satoshi wallet to the Binance exchange. we have spoken before that delisting by multiple exchanges might be one of the reasons for these volatile movements due to the lack of liquidity. So what are your thoughts on the most recent move, Kevin?
Yeah, look, lack of liquidity can always lead to volatility, but here it's still showing us that why we just talked about that the market is maturing, and I think the market's showing many signs that it is maturing and it's moving away from that hype-only kind of push or catalyst that's been pushing it since almost it started. Since the market actually became a market, we're seeing that FOMO and hype are still a big part of how this market moves, and a lot of that has to do with the fact that it's unregulated, right? So, if this market was regulated, first we wouldn't have seen those delistings just because somebody doesn't like somebody. That generally wouldn't have happened. We might have not even seen the listing to begin with. That's up to speculation as well. But from that, on that same side of the story, we definitely wouldn't see these type of stories causing so much a movement inside of a market. You're not going to see fake news cause IBM stock or Microsoft stock to quadruple in a few days. That's just not going to happen. For the most part, that news wouldn't even be released. And even if it was, it'd be released in such a small community, and it would immediately every other regulated news source or every other news source that deals in regulated markets would pretty much come and step on it. It would just get squashed. And we don't necessarily see that in this market. So again, it shows us that hype is still a main driver in the market, but it also shows that there's probably cartels, and meaning cartel, I don't mean drug cartels, but when you talk about businesses, cartels are basically businesses that work together and then basically say, well, you focus on this market, we'll focus on this market, you do this, we'll do that, and they work together basically to monopolize an industry. And there's definitely cartels in crypto, and Bitcoin Cash is a cartel. By any legal definition. So what you're seeing is obviously it's an orchestrated attack. They're trying to push price, and it worked. The thing is they should never be able to even start that cycle. There should be things that stop them from doing that. And again, that's kind of what regulation will bring to the story once it starts to be more relevant inside this industry.
And I think it's an interesting point you make that if it was more regulated, if there was regulation, then Binance wouldn't have been able to delist them. Excuse me. So very interesting thoughts there. And Jason, please, from you.
So I really don't see why, but for whatever reason, Bitcoin SV fans seem to be really invested in whether Craig is Satoshi or not. And so far, Craig's claims have worked out great for him. Claiming he had copyrighted Bitcoin, they copyrighted Bitcoin itself, sent Bitcoin SV soaring something like 200%, and it's never really come down since then, despite the Copyright Office, explicitly clarifying that they didn't endorse the view that, he was Satoshi. And now there's a fake news website that says Craig transferred money out of Satoshi's wallet, and it doesn't take a genius to guess who has the most to gain from making a claim like this. And I think the community is well aware that Craig attempted to fake correspondence and transactions, and so faking a news article wouldn't seem out of the realm of possibility. That said, sooner or later the truth will come out about who exactly Satoshi really is. And given how invested Bitcoin SV fans and investors are in that, at that point, when it finally becomes clear that Craig is not Satoshi, that should really plummet. The Bitcoin SV should really plummet at that point.
Okay, well, should that time come, I think that'll be a very interesting discussion for us on Crypto Now. Now, blockchain games have actually contributed greatly to the adoption of the technology. So we know that cat breeders clogged the Ethereum network in late 2017. A new game called F1 Delta Time has recently actually auctioned a unique digital formula for more than $100,000. It appears that there were 14 bidders. So could this be just another PR stunt? Kevin, we'll go back to you.
Well, if you look at history, and again, the fact that this industry, again, is still very much hype-based for the most part, 14 bidders pushing something as high as 100,000 for a digital artifact seems to me that there was probably some collusion within those bidders. If something was that popular to push the price that high, generally speaking, you'd probably have more interest, not just from 14 people. So yes, I would say there's probably some type of collusion there. There's probably something under the sheets that we're not supposed to be, that we're not seeing. And it's unfortunate, but it's also part of just the way all, not just crypto. When we talk about things here, when we say, something's immature or that it's a hype-based market and that these things are possible because there's no regulation, understand that crypto isn't the first market that this has happened to. The same things, the same very similar nature happened with the Forex market, and it happened in other markets like derivatives and even bonds before they were highly regulated. This is not something that's just about crypto, but we see these things time and time again. And unfortunately, we're going to continue to see them. I think gaming, specifically when you talk about either blockchain or even crypto for tokenization, for example, is probably going to be one of the biggest industries that gets touched by, and it already has been one of the biggest industries. And it's much easier for them to adapt to new technology because they're not regulated. So when the financial industry has taken time, right? You had JP Diamond say that, I don't know, Bitcoin came from the devil, and then, short 3-4 years later, he makes JPM coin, and now Bitcoin's not so bad. And I think that a lot of that has to do with the fact that he works in a regulated industry. So regulated industries kind of have to approach things a bit differently. Gaming isn't regulated. Gaming can pretty much do what it wants for the most part, and that's why they're so quick to adopt new technology. So I do think that there's always this kind of chicken and egg thing when it comes to crypto, when it comes to hype, when it comes to when we hear bad stories, even the fake news we just talked about with Craig Wright, even Craig Wright saying he's Satoshi and trademarking the Bitcoin white paper or whatever nonsense. Obviously, it's not him. I think anybody with a brain knows it's not him. But what it does do is it gets it into mainstream media. People are reading these things, and even though it's bad news, there's that famous Barnum Brothers saying that says, all publicity is good publicity. And I think for a certain extent, for a mass adoption to really get people to get their ears and eyeballs into blockchain and Bitcoin, and crypto in general, I think that's generally true. So at the end of the day, whether there's collusion in these bidders or not, whether the 100K is real and somebody actually wanted to pay 100K for some type of digital artifact, it doesn't really matter. What matters is that we're talking about it, and that the market is propelling forward. But just understand that once we do get to a higher, more regulated market, these type of things just simply aren't going to happen.
And you're absolutely right in terms of no publicity is bad publicity, because definitely, these sorts of things are definitely going to make it into the mainstream media, as you say. So you believe there is potential for some collusion there. You're not fully comfortable with it. So Jason, we'll go to you. What are your thoughts? Do you share a similar view? Collusion, is it possible?
Yeah, I totally agree. And the chances that 14 bids would make a digital asset go to 100,000 that nobody's ever heard of. And keep in mind that this game, F1 Delta Time, hasn't even actually been released. So this just strains credibility that people would spend this much amount, such a huge amount for a game that isn't even launched, that they can't play, that isn't popular. It certainly seems like some sort of PR stunt. So I would say I would totally agree with Kevin on this.
Very similar views. Now, Jason, we'll stick with you for the minute. So, No Middleman Crypto Project looks to extend Satoshi's vision of having no middlemen into the e-commerce world. They have actually created a crypto payment gateway for WooCommerce platform. It does sound like a great solution, but how can users ensure that projects like this are actually safe to use, Jason?
Yeah, so I checked out. It seems quite impressive. It's basically a WordPress plugin. WooCommerce is a WordPress plugin, and it works with WooCommerce, so it's effectively a WordPress plugin. And the vast majority of websites are built on WordPress, so this really opens up crypto to mass adoption. As to whether one can trust the service or not, the code is apparently on GitHub, so somebody interested parties could just go in there and audit the code themselves. Now, I realize that isn't a possibility for a lot of users, so I think a lot of companies should consider maybe having a professional outside auditor audit the code, and then also publish the code just in case somebody were interested in auditing it themselves.
Okay, so more themes, however, of mass adoption coming through there, which is extremely exciting. So, Kevin, we'll go back to you. Give us your thoughts, please.
Yeah, I agree with the audit scenario. Obviously, the whole thing, one of the most intriguing things about blockchain is a trustless system. That's one of the most intriguing things, and I think that's really where you're going to see the real change that blockchain can make for the world. But that's a change that's not going to happen overnight, not even close. It's going to take years and years and years for different industries to trust a trustless system, because at the end of the day, there's really no such thing as a trustless system. You have to trust the system that there's no trust needed to trust the trustless system. I mean, it's kind of I don't know, it's almost a Pandora's box. But at the end of the day, there's really no trustless system. But you have to trust the system that made the trustless systems. You have to trust the technology. And that's going to take a long, long time for that to happen. It's going to take much longer than, let's say, it took JP Diamond to not hate crypto, right? That took 4 years. I think this is going to take inevitably longer, especially in some industries. But like Jason mentioned, and we always mention on this show, mass adoption comes in many shapes and forms. And mass adoption can simply mean that when you say the word Bitcoin or crypto in a conversation and there's 10 people in the room, 8 people go, oh yeah, crypto. They might not have any idea really what crypto is, what it's used for, what tokenization is, what Bitcoin is, how it works, how the blockchain works. They probably have no idea, but they've heard of it. And that's the first start, right? It's the same thing. I remember in 1994 with the internet, and if I told my aunt or my uncle or something, I'm on the internet, they would have said, what? And it took 2, 3, 4 years, probably till 96, 97, 98 for the world to know what the internet was, even though no one used it, or the vast majority didn't use it. And it took 20 years for us to get to the point we are today, where pretty much everybody uses the internet. And obviously with exponential growth, it's not going to take 20 years this time around, but it's still going to take some time. But anything that pushes progress forward is a good thing. And yes, they need an audit 100%. There has to be an audit, and they need to take it slowly, right? So we'll see how it goes.
But it's interesting that you say that because people generally don't like those buzzwords, but I guess these buzzwords are actually key to monitoring where the market's going and where mass adoption essentially is going. Now, just lastly, CNBC Fast Money show host actually recently said, sell the house, sell the car, sell the kids and buy Litecoin. So this was, as he commented, that the asset is up by 440%. A trend has been observed that markets do the opposite to what CNBC actually tweet. Very interesting. So is this one of those cases again? Jason, we'll go back to you here.
So he actually said that it's been up less than 3%. So hopefully his wife and kids, basically people's wife and kids are worth more than that. So it's not really much of a gain. But in all seriousness, I mean, like we talked about this a couple of days ago, Litecoin, the fundamentals have been going really strong. The average transaction volume is fairly high and getting higher. Also, there's been a lot of large single transactions going through, so it seems that pretty much large players are using it to transfer funds. But even active addresses are up this month. But essentially, like I said the other day, it seems like the price has just totally run away. I mean, yes, the Litecoin halving is happening, but I think that's totally priced in at this point. And even the director of the Litecoin Foundation recently came out and said that he thought it was overvalued, and I think I would tend to agree because it's jumped up fairly quickly, and it doesn't really seem like, while the fundamentals are good, it doesn't really seem like it justifies that. I think a lot of it has to do with people hearing about the halving and thinking it's going to have a huge impact without realizing that it's probably already priced in.
Okay, Jason, thank you. And Kevin, we are slightly pushed for time, so let's hear your thoughts finally for us.
So definitely priced in, and it's not just CNBC. When the collective universe knows about something, it's already too late. That's always the case, right? So when someone tells you to buy a stock because they heard it on TV, you should probably be looking where to sell that stock. Mm-hmm. That is always the case. It has nothing to do with CNBC or who said it. That's just the way it works, right? If everybody was keyed in to when something was going to become, going to shoot to the moon, it wouldn't shoot to the moon, because that's just how markets work. So yeah, I would say that it's already priced in. The halving itself should have an effect, but there's more of an effect to saying to everyone, look, it's going to have. And that's going to be positive on the price, because then they're buying now. Why would they wait? Why would they wait for the halving if supposedly it's going to make a big impact? So definitely priced in 100%. And the halving may actually have a negative effect this time on the fact that they're buying the rumor and selling the fact, meaning they're buying now. Once it halves, they sell.
Always a fantastic expression. I absolutely love that one. Kevin, Jason, as always, it's been an absolute pleasure having both of you on the line with us today. Thank you so much.
Thanks, Leah.
Same to you.
Now, before we sign off, I do have a last-minute update from my editorial staff regarding the crypto market. The total market capitalization has stayed close to the $280 billion level, briefly slipping south of this mark. Trading activity has remained active. The CoinMarketCap website's daily traded volume still stands slightly below the $90 billion territory. Bitcoin SV and Bitcoin Diamond remain the top performers, although the former has given up some of the gains. Well, that is all for this Thursday's Crypto Now live show. We thank Jason Fernandez and Kevin Merko for the expert analysis. We will be back tomorrow with this week's final edition of the Crypto Now show, but this time it will be at 1 p.m. CEST. So we'll see you then tomorrow.